Hi, my name is Natalia and I'm a real estate attorney here in the state of Florida. And today I want to talk to you about FIRPTA withholdings and foreign nationals. So one of the biggest ways in which I see that realtors in the state of Florida are completely misinformed about how the process works is that they do not know how FIRPTA withholdings can impact their foreign national clients. And so I want to start out by saying, you as a foreign national can buy real estate in the United States. There's nothing prohibiting it, nothing requiring it that you buy it as an LLC versus as an individual human being. There's no such thing, and there's no prohibition on the acquisition of real estate by a foreign national. So that's number one. Anyone can buy real estate so long as they are competent, meaning, you're an adult that has the capacity to accept real estate title, etc. So FIRPTA is a tax that requires the buyer, or in most cases, the title company, to withhold the proceeds from the sale, a certain percentage of the proceeds from the sale, and remit those proceeds to the Internal Revenue Service. The seller can then go and petition by filing a tax return for the return of at least some of those withholdings based on whether there was actually any gain or profit made on that particular sale. So that's the number one way that works. The part where realtors often are misinformed is that they think that by having their foreign national client set up a local LLC or a local entity, that they're going to somehow escape the FIRPTA withholdings. And that's just flat out wrong. If you direct your client to go set up an LLC in the United States, Delaware, Florida, Arizona, whatever name you, that LLC, if it's owned by one foreign national, still going to be subject to FIRPTA. It's going to be completely passed through. That FIRPTA withholding is going to have to happen. If there are multiple members in that LLC, or other kind of entity, then what you're going to have is that it's going to be subject to partnership taxation rules. And partnership taxation rules for foreign nationals are as follows. If you're a foreign national and you're an individual, that share of your partnership interest is going to be taxed at 37%. And the person or entity that's going to have to do the withholding and payment and remittance to the IRS is going to be the partnership. So the title company and buyer won't take care of it, so it's not directly impacted by FIRPTA withholdings, but those proceeds are going to be taxed at 37% partnership rate. So that's something to think about. Now, if the foreign partner, foreign co-owner in this particular US LLC is a corporation, then they're going to be taxed at whatever the highest corporate tax rate is on their share. Right now it's 21%, but in prior years it's been as high as 40%. So that's something to keep in mind, because if you're a realtor and you're advising your foreign national clients to put themselves into an entity in the United States in order to bypass a 10 to 15% FIRPTA tax rate, you might actually be kicking them into the 37, 21, 37, or however much the corporate tax rate goes up, depending on the current administration, and subjecting them to much higher tax rates than if they had just done the standard FIRPTA withholding and then petitioned to get back some money based on whether there was actually gains or not from the sale. So realtors out there, please be very careful with encouraging your foreign national clients to create entities in order to attempt to bypass FIRPTA or other types of IRS withholdings on foreign nationals. It can come back to bite you in the booty. And also, if it's not properly collected and not properly remitted, you're also subjecting your client to penalties, interest, and fees as a result of trying to get around the FIRPTA withholding. So that's my information for you today. There's also a form that you can fill out if you are an entity owned by foreign nationals and you'd like to be considered as a U.S. entity for tax purposes. That's Form 8832. The IRS makes a determination on whether to accept your entity as a local entity rather than as a foreign entity or foreign owned entity. But again, that's entirely up to the IRS. So good luck out there, investors. I'm Natalia Willett, and I'm a real estate attorney here in the state of Florida.